Hello and welcome to Boom Fact Check. If you didn't know it already, India's economy slowing down has lost momentum in each quarter since the one ending March 2016, and the numbers are looking a little worrisome, but we'll come to the numbers in a little bit. More importantly, it's useful to understand what has got us here. Why is the economy seemingly suddenly slowing down, or is this part of something that was gathering steam much earlier and set in motion in some ways much long ago? So the question we're trying to understand and ask is, why is this economy slowing down? What are the factors that contribute to this economy when it's strong and when it's growing and is displaying a lot of momentum? And thirdly, of course, can things come back to normal or what we would like it to be? To discuss all of this and answer some of these questions is Shankkar Aiyar, well-known author and columnist in the New Indian Express. Shankkar, thank you very much for joining us this afternoon on this live discussion on Boom Fact Check. So first question, and we'll come to the numbers in a little bit. So from your perspective, why is India's economy slowing down?
But the straight and simple linear answer is that things that went wrong in 2008, 9, 10 and thereafter the policy paralysis followed, much of those issues have not been addressed. The slowdown is essentially structural issues with the Indian economy, which A is agriculture, which is rural distress. Second is export competitiveness. Third is the large number of non-performing assets in the banking system. And fourth is the lack of job creation, or I would say poor job creation, inadequate job creation, jobless growth. I mean, you can choose whichever phraseology that sort of makes sense. So the simple one-line answers is that the structural problems that needed to be addressed continue to haunt the Indian economy.
Right. So you're saying that these structural problems were in some ways created in 2008-9, and we've never as a country or an economy addressed them. So what are these 2 or 3 key structural problems from that period, again, from your vantage point?
So my big elephant in the room is really the rural economy. So, those who have land find it difficult to make agriculture or farming viable because of the cost of imports, the absence of technology, the irrigation issues. And the big thing about agriculture is, although it's the largest private sector, it is the most licensed sector in a sense, because what you produce, when you produce, who you sell to, how you sell, all these are under government regulations. Now, those who own land are in distress is most visible in all the agitations that we see around India. The landed class, which is the Marathas, the Jats, the Patels, are campaigning for quotas, job reservation, is a clear indication that there is something significantly wrong with the viability of the agriculture sector. The second part of the rural economy is the seasonal migrating workforce, which used to get jobs in manufacturing and construction. All sectors that employ labor intensively, or the labor intensive sectors, have shown a secular decline in growth and therefore in absorption capacity for labor. So this is the biggest elephant, and this is an issue that requires addressing at the states level. It's not really a central problem in the sense that much of the issues are vested in the state governments. The second issue is export competitiveness, and that is much more than the value of the rupee, which is being argued about. So if you look at what we import and what is the production in India that is being replaced by imports, and you just have to look at what we import from China to get a pretty good idea on what's happening. So the price competitiveness of Chinese goods is disabling capacity utilization in the Indian manufacturing sector, making Indian goods less competitive or price competitive.
Right.
And that's why there's no investment, there's no job creation, and the cycle follows.
Right. So, Shankkar, if I can rewind a little bit. So, you said that the rural economy is one reason, the rural distress in the rural economy is one reason. Secondly, you said the import substitution by the reverse import substitution in some ways. You're saying we're obviously importing most of the goods that we could have potentially manufactured here, which is why Indian industry is not able to grow and produce more as it may have done earlier.
Yeah, I mean, most succinctly, Govind, we are basically exporting demand, exporting jobs, and exporting growth.
Right. So, if I look at the first one, the rural economy, now when we say India's economy is now growing at 5.7%, unlike let's say more than 8% a little over a year ago, why is it, is rural economy the reason for this decline or this slowdown? And if you were to really break it up, what would they be?
So the rural economy, Govind, doesn't account for more than 15% of the GDP, okay, in value terms. But it employs 50% of the workforce. And for any economy to grow, consumption, demand are all material factors. And if the viability of the rural economy is hurt, the job creation in the rural economy is hurt, then consumption is hurt, and that translates into impact across the sector. This is the first time, the first indication of this always is drop in consumer durables, and then now people are talking about distress, which is being connected to GST, but it's not so, it's distress in the FMCG sector.
Right. So, Shankkar, those are the, I mean, you began with an elephant in the room. So, there are two elephants in the room right now with us. I'm not talking about you and me. The demonetization and there's GST. Your quick, take on today, when you look back, what has been the impact of particularly demonetization, which is now a while ago, and GST on the economy, and some people specifically blaming the slowdown on these two factors?
So, both demonetization and GST, the blunt force has been on the informal sector, the cash economy, basically. So, but I don't think they are the originators of the problem. I think demonetization aggravated what was already happening. If you look at the quarter-on-quarter GDP growth, that has been sliding for much longer than the November 2016 event, and GST has just kicked in July. So GST has aggravated the fear in the informal sector, and you know that almost 80–85% of India's business enterprises are all small and medium enterprises for reasons of historic reasons of labor rigidity, all those issues. So I think the short answer is demonetization and GST have been aggravators, but the real problem is structural.
Right. So let me flip the question from the demand side, right? So consumers, that's you and me and all of us, we consume, and as we consume, we obviously create demand for goods and services in the economy, and that in turn will obviously help drive gross domestic product higher. What's happening there, and why isn't that enough to keep things buzzing along like it was earlier?
Well, the simple way to look at it is to look at the poultry economy. So number of hens lay eggs, and eggs sort of are sold, or broilers, chicken, stuff like that. Or you look at the dairy economy, how many cows, how many liters of milk and all. So the consumption story is basically rests on how many people have surplus income or incomes at all, and whether new incomes are being created, new jobs are creating new income. So the virtuous cycle is simply this, that consumption drives demand, demand drives investment, investment drives job creation, jobs create incomes, and incomes create consumption. That's the virtuous cycle. And that cycle has been interrupted. It is nobody's case that no jobs are being created, but nobody can deny that not enough jobs are being created. And there is a demographic disruption and there is a technological disruption. Demographic is we are adding 10 million, 12 million people to the workforce every year. There's a huge backlog already. And then there is the future story. For the first time, information technology, banking, financial services, all of these sectors which were perennial employers, which added to the job creation factor, are struck by technology. You will hear from most private bankers how either they're not hiring people or that they're shrinking the workforce.
Right. So, Shankkar, the jobs part, if we were to look around the world, and this is again trying to get to the bottom of it, right? So, we could well be growing as an economy and not creating too many jobs, like it's happening in some other parts of the world. So, why are we then affected both ways?
Well, because the way the economy is designed is essentially we have about 52-53% in services. Now, services on their own, there is job creation and drives investment, but there is the other part of the economy which employs the bulk of the workforce, and that is where we are not creating enough jobs. So there is whatever growth we have seen in the last 2 years has been an anomaly of sorts, because it has come amidst low credit growth, low exports, low investment rate, lower savings. So obviously there is some productivity headroom that has been exploited, and that's what we are looking at in terms of the headline numbers. And our situation is that a large part of the workforce, Govind, is not skilled enough to sort of migrate to the high skill, high productivity, high income job assembly. Right. So we are in a tight corner, and we are adding more and more people every month. We are adding 1 million people to the workforce.
Right, but just to revisit this, Shankkar, for a second. So, is the fact that we don't have enough job creation, is that the outcome of slow GDP growth or economy not growing, or is it because that we are not creating enough jobs, is the GDP not growing?
Well, if you want to put the horse before the cart, the slowdown has resulted in lower job creation, aggravated by technology and other disruptions. And lack of job creation has hampered consumption. So job creation is both a cause and a consequence in this current. I mean, a consequence that is a secondary consequence. Primary cause is, of course, growth.
Right. Okay. So let's go back to where we started, Shankkar, and then as we conclude our chat today. So you started by talking about structural problems. You said 2008-9, which the banking crisis, the fact that we too have been victims of the banking crisis, perhaps something that we didn't realize at that time so much, but now I think we realize it more, and whether or not we found those solutions. So if we were to look ahead now or spin forward, what are the 2 or 3 things that you feel we need to do in order to address the slowdown that we're seeing?
I think we have to address the issue of the distress in the rural economy, which is both the farm sector and the non-farm sector. Now, the farm sector, all the ideas are out there, but the implementation is rather poor. Delivering market access to producers of fruits and vegetables, for instance. I mean, for a poor country, we lose about 90,000 crore worth of grains and fruits and vegetables on the way from the farm to the market. Those are issues that are addressable, the solutions are known, things are not being done. That's one part of the story. Second part of the story is that agriculture is only a seasonal employment. It's not a full-time employment for nearly 60% of the people in the rural economy. They migrate to towns, semi-urban areas, find work in mining, manufacturing, and construction. And all those sectors are hurt. All these sectors are hurt also because these are the sectors which are trapped somehow or the other in the NPA story. So how do we create jobs in the construction sector? And so the immediate low-hanging fruit is really affordable housing, urbanization. I would say that create land banks out of land owned by PSUs which are lying idle. Enter into a PPP for affordable housing, There are 3,900 census towns without proper administrative structure, employ people, put out the urbanization program. Only a third of India's towns have waste management, solid waste management systems. We have power issues, we have water issues. So I think the India's growth story, the opportunity is all there, and the opportunity lies spotting the problems that Indians like you and me and others face on a day-to-day basis and addressing those problems. Once you address those problems, you will create jobs, demand, consumption, all those too. You will also create an expertise in managing scale and complexity. And that skill will give you an entry into global markets. A small example, I will tell you how India sort of took over the LED bulbs market. Now, similar things can be done in other sectors.
Right. Okay, Shankkar, so we've run out of time. So let me, wrap very quickly. So we started talking about the 2008-9 structural problems. You've talked about the distress in the rural economy contributing to the problems. You've talked about the fact that we are really being hit by imports from countries like China and therefore unable to expand capacity, which in turn would have, let's say, led to more job creation. We've also talked about the demand slump when it comes to people like you and me. And very broadly, while I think you've suggested some solutions as a way forward, your real, let's say, the shining point here is that if we were to focus on the everyday problems of people like you and me, then we've really moved some way, if not a long way, in addressing the very fundamental problems that face this economy. Am I right?
Yeah, perfect. I mean, in India's growth story is in India.
Right. Shankkar, we've run out of time. Thank you so much for joining us and hope to be chatting with you very soon once again on Boom Fact Check.
Thank you, Govind.
Thank you, Shankkar. That's all we have time for. We'll be back next week, same time, or maybe even earlier on Boom Fact Check. Thanks for watching.